Guys, how you doing? Okay, quickly let me show you how I was able to navigate price action this week. So once I open my chart, remember, as I used to say, first thing we want to pay attention to is our daily time frame. Once we are sure on what our daily is looking like, from the weekly to the daily, from the daily to the 4 hours, then we have M15 for our entry point. So from this place, I saw this so sorry about that. Okay, so I picked this other block because price had been bullish and there was still some eyes to be taken on our 1 week time frame, that is on our weekly time frame. You can see it here. If you go back in time, yeah, you will see that there's an eye here and there's another eye here to be taken. So let's take this out. This was taken already. So let's go back to our daily time frame. So seeing that I have a old eye to be taken out, I was still anticipating more bullish movement. This is the eye ultimately. So we saw our other block from there. Then what do? We want to go to your H4, and your H4, what are you looking for? You are just looking for your reference points, your other block, or your fair value gap. And guess what, guys? I found it here. First, I saw a fair value gap, and I saw a block attached to it. Can you see this block, this doji candle, and this other block, this red candle here, attached to a fair value gap, and beneath this place is liquidity. So this is the other block, beneath here is a liquidity. So I marked this zone. You could have wanted to use this zone, however there's somewhere more stronger here. Remember, we marked this daily time frame. All of this space here is another block on the daily time frame. This was the fair value gap on the daily time frame. Market came back, moved out, then returned to take out this liquidity and filled up this fair value gap. So let me show you how I engaged the markets here on the M15. So I went to my M15, and guess what, guys? It was a beautiful ride. So on my M15, I was waiting for our pattern to play out, a sweep in liquidity, down, and what, a break in structure to the upside. Can you see that? Sweeping liquidity to the downside, then a break in structure to the upside. Then I used this other block that was attached to this fair value gap. See, can you see this fair value gap here? So I just used the two together, and my stop loss was about 20 pips that day. This 22, I used 20 pips that day, but 22 pips is fine. Remember, as I said earlier on, that once you take your entry from your M15, you go back to your 4-hour time frame to note where your take profits will be. Market moves from one liquidity to another, external liquidity to internal liquidity to external liquidity. So since market was moving from another block, I was expecting a high to be taken out. So I placed my take profits about this point, but you could actually leave it till this point because price is going as far as this. Price is coming down here to take away all this liquidity. But in case you are not too sure, you can put your take profit here around this fair value gap and this other block here, because there might be a little bit of retracement. This is 1:10. If you are doing this 1:10, but that day I just took 1:5, and that was it for me. Yeah, I did 1:5 about this eye, and price got there, did 100 pips, and that was it for me. Can you see this? This is 109 pips. yeah, that is it, guys. Good luck, good trading.